Hello, everybody. My name is Todd Mercer. I am one of the founders and managing directors of Mercer Wealth Management. A few weeks back, we put out about a 47-minute video on our 2022 market outlook, and we updated it mid-year. We did this outlook back in January. We do it every year, and this year we had some pretty bold predictions, and we thought the market was about ready to take a turn to the negative. We put that out about 2 weeks ago, and what we're doing now is we're going to run through our 14 predictions, and we're going to break it into smaller parts for people. So we're going to run through the 14 predictions today that we have for 2022, and then we're going to be putting a series of videos out over the next couple of weeks of each one of those predictions in more detail to break it into smaller parts. So again, today we're going to go over those 14 predictions. So we started with number one, possible recession in the U.S. this year or in the end of 2023. We definitely feel that that's going to happen. We feel that we're actually potentially in a recession right now. First quarter GDP was negative 1.5% revised last week. Second quarter comes out on July 28th, so we'll know for sure if we're in a recession or not at the end of the month. We said that U.S. markets would struggle and have a negative return this year. We definitely feel that's going to happen, and we feel that we're going to probably have well into the double-digit returns and probably a bear market, meaning north of 20%. We say global markets would struggle and emerging markets could be worse. Again, with what's going on in Ukraine and the emerging markets, we really feel like the global markets, the developed global markets, especially in Europe, are going to struggle and have negative returns this year, and emerging markets are going to be far worse. We said energy prices would increase, and they have, and we think with the current policies that we have here in Washington, that's going to exacerbate the situation, and also with the war in Ukraine, energy prices are going to be elevated for a protracted period of time. We said interest rates long and short would rise, and they have, and we think that they will continue to rise. The Fed has increased interest rates 3 times, and we think they will increase at each one of the meetings in the future, and the Fed fund rate could be north of 4% by the end of the year, potentially. The 10-year has gone from 150 to north of 3% and touched on 3.4 a few weeks ago, and we think that that could continue to rise as well as the Fed pulls money out of the money supply. We said inflation was still going to remain an issue. It obviously has remained an issue. Last month it was the highest it's been in the last 40 years, well over 8%. We said the dollar may weaken, and we missed that one, but we're changing our stance on that. As the rest of the world economy gets weaker and weaker, and our interest rates are relatively higher than the rest of the world, it makes our country a lot better place to invest, and so a lot of money has come to the U.S. to invest, which is causing a strengthening of the dollar, plus security issues causes the dollar to be strengthened. We said unemployment rate would be steady, and we would have some issues in the labor market maybe towards the end of the year. We're definitely starting to see cracks in the labor market right now, as tech companies are announcing that layoffs, as well as they're not hiring. We think that's going to be exacerbated by the end of the year. We said consumer and business confidence would fall, and we're definitely seeing that right now in reports as inflation is impacting businesses and the consumer. We said corporate earnings would be good through the third quarter. We saw really good earnings in the first quarter, although a lot of companies, especially retail companies, reporting that their profits were being impacted by inflation, and also manufacturing companies. And we think that that's going to continue through the rest of the year, and we think that corporate profits are going to be falling through the rest of this year, and also earnings per share are going to be falling through the end of this year. We said we had gridlock in D.C. There was a recent bipartisan bill passed on gun control, but other than that, pretty much we've had gridlock in D.C., and we think that's going to continue well into the election in November and probably into next year and maybe even into 2024. We said COVID would still be an issue, and it is. There's a new strain out right now, and we've seen spikes in COVID positives, and so COVID is definitely still an issue, not only in the United States but the rest of the world. And we also said that we'd have volatility again, and we for sure had volatility in the last few months. We actually think that we've had several spikes in the market, and we think those are bear market bounces, and we think that those are selling opportunities, not buying opportunities if you get those in the market. So thank you for joining us today. If you'd like to see the full 2022 outlook that we did a couple weeks ago, the link is below. It's about 47 minutes long. If you like this video, please like and subscribe. Please share it with your friends and family. We're happy to do that, or happy if you do that. And we'll be putting out, again, 14 videos in more detail on each one of these topics in the next couple weeks, so look for those. So thanks for joining us today.